He was one of the biggest bulls on China's economy for some 25 years, but has now become one of the bigger bears since early last year. Shaun, welcome. Good to have you here in the U.S. Been a while since you've been here.
Good to see you, Ty. Yeah, this is my first time in the U.S. in 4 years. I got locked down because of COVID in China, so it's great to be back.
And how long were you locked down? You lived there with your family in Shanghai.
So I was locked down for 3 full months in Shanghai. We had problems the first 2 to 3 weeks getting access to food. We weren't able to buy anything. But actually, it wasn't just one lockdown. 40% of my employees were locked down 3 times. So the second and third times were 1 and 2 weeks each. And it's these lockdowns that has caused a lot of depression and a lot of anxiety in China. So right now, the government has estimated about 50% of Shanghainese are suffering from depression. And that's what's hitting consumer confidence right now. So if you look, in April, retail sales went up 18.4%. They only went up 12.7% in May. Chinese consumers are cutting back on their spending. So investors need to be cautious whether there's going to be an economic recovery
or not. People thought the Chinese economy, when the restrictions were lifted, they thought the Chinese economy would snap back very, very vigorously. It hasn't?
It hasn't. So, I mean, JP Morgan and the big banks said that Chinese households are sitting on $2 trillion of savings, so they were going to go out and do revenge spending. I predicted that wouldn't happen, and unfortunately, I was right. The reason it didn't happen is Chinese faced a lot of salary cuts, unpaid furloughs in 2022, but there are even bigger, more geopolitical issues that are facing the Chinese consumer. Chinese feel that the United States and the Blinken regime is trying to contain China's economic growth and destabilize the party. You can look at it. KKR, the big private equity giant, just announced yesterday that they're reshuffling their leadership in Asia to de-emphasize China. Sequoia, the big venture capital firm, split their China operations. And there's a lot of pressure and backroom from the Biden regime to American companies not to invest in China right now. So FDI into China only went up 2% in Q1 of this year. Now, what does that mean? It means that SME business confidence in China is low, consumer confidence is low. They feel that we're going to go into a 10, 20-year economic stagnation because of the United States, and what the Chinese feel is economic coercion. So the Biden administration has gone to the Dutch, they've gone to the Japanese and said, you can't sell semiconductors to China
especially
anymore.
The Dutch, extremely, high-end semiconductor machinery, let's say they're worried about. We have seen a number of high-profile American execs go to China. Jamie Dimon, Elon Musk, I believe Tim Cook perhaps was recently there, maybe the head of Starbucks. So they do seem to be trying to make a point of going there. They're getting a ton of media coverage. Does that mean there's still hope for this kind of, whatever we want to call this relationship, where a lot of major companies are still seeing this as a huge part of their future?
Yeah, that's a good question, Kelly. There is hope, but you saw the companies that you just mentioned, Starbucks, Tesla. China is their largest or second largest market in the world, and they've only just come into China to take a look around in May and June. So what's happening is
you think those were recon visits more than they were confidence-building visits?
They want to see, is China normalized? Are there going to be COVID lockdowns again? How is the consumer confidence? Is China a place that they can still invest? If you look at it, Larry Fink was supposed to go to China in April, for the CEO of BlackRock. He didn't go because of pressure from the U.S. So what's happening is I don't think the multinationals are going to come rushing in until maybe 2024. They're going to want to wait and see. 2023, how is the Chinese government? How is geopolitics? Let's invest in India. Let's invest in Vietnam. Maybe next year.
Are businesses playing good cop to the U.S. government's bad cop or tough cop? Because it seems that both parties, going into an election year, oh, by the way, want to appear to be tough on China.
Yeah, one of the problems is the only thing that Republicans and Democrats alike can seem to agree on is to hate on China. It's to try to say de-risking from China, maybe decoupling. I think a lot of American businesses right now, Ty, frankly, are nervous about investing in China. They don't want to be caught up in political attacks from D.C. They don't want activists to attack them. I was talking to a big sports apparel company, and they're thinking maybe we should split our China operations off from the rest of the world so that our China operations can just focus on expanding in China, not worry about the Xinjiang, genocide and, forced labor allegations in Xinjiang with the Uyghurs, and just do business. So I think the business community is against what Biden's doing, but they don't want to say anything.